This week something shifted, and not in the usual markets are down, stay calm kind of way. For weeks, key support level held on the S&P, the Nasdaq, the DAX, and this week they didn't. And when multiple indices break support at the same time, that's not noise, that's a signal. Now, I'm not here to tell you it's the end of the world. I don't do that, right? I read charts, not headlines. But what the charts are telling us this week is different from what they were saying 2 weeks ago. And I want to walk you through exactly what changed and what I'm watching now. What does that mean? I'll take you through everything, indices, currencies, commodities, crypto, and show you what the first real warning signals look like on a chart. Free swing trader playbook at investorhorizon.com, link in the description below. Let's get into it. Starting with the analysis of the SP 500, and well, we had quite a big down week. And so what does that mean, right? Initially, we said that we had the beautiful little wedge that's being formed right here, and that we may oscillate. We broke through that, but not only that, right? We had basically a support level identified there with the previous the previous low, right? And we just went through, right? We closed below that level. So I wouldn't say it's like yet danger zone or whatever, right? This is still a consolidation. Even though this heads lower, we're still in a consolidation range market territory. But the fact that we are below, and let's see if we confirm that next week, means that we may be heading towards a deeper correction, and maybe much deeper, because the last basically support that we have is over there, right? That's very deep. Let me just change the color. So to be seen, right? But we need to see basically what happens next week around that support level over the next few weeks. Are we going to confirm or not? So still ranging, but this is definitely one of the warning signs that I wanted to talk about this week. And if we move on to the Nasdaq, well, it's not as dramatic, but similarly, right? Nasdaq is just on that level right there. So that scenario is still at play, right? But you know, now we are at the support. We need to see how it's going to react. Are we going to bounce back? Are we going to break through, right? And either all this, like if we stay above, we consolidate. We still have chances to consolidate, to break to the upsides for a new high later this year and have another bull leg, right? But we are kind of like, we need to watch that level there, because if we do break through and we validate a little bit like Bitcoin did, and we're going to talk about that, like Bitcoin did a few weeks ago, then yeah, we're definitely going to revise the scenario, right? So similar story for Nasdaq. We haven't yet punched through that support. So talking about Bitcoin, right? Let me take it as an example. I'm kind of mixing a bit stocks and crypto this week. So we did say that we broke through basically very clean the all-time high a few weeks ago, right? And then we're kind of like stuck in between. We tried to get past a couple weeks ago, didn't work out. We did last week, right? Reclaimed up to 72,000. And this week we are kind of like sandwiched between these two lines. So actually I drew this line this week. You know, I'm kind of like adaptable, and I've actually seen other technical analysis from some other traders, and that level actually is interesting to watch, right? So that's the previous low of that basically swing, right? And as you can see, right, if we draw a line there as a potential resistance area, we see that 3 weeks in a row, right? The price tried to penetrate, didn't. Tried to penetrate, didn't. Tried to penetrate even more this week and didn't, came back under, right? So we have this kind of like danger zone right there, but we did say that because we punched through and we closed below the all-time high a few weeks ago, we definitely confirm, for me at least, the bear market, right? And it looks like now we are basically pulling back and heading potentially lower, right? Heading down, our pullback is here, and now we need to see how we react, but it doesn't look great. But again, I'm just reading the chart, right? Something else might happen, and that's fine, but that's the scenario I have in mind. And looking at Ethereum, It's not as dramatic, you know. If we draw our line there, right, we do have, you see, right, we do have this resistance area right there. So yeah, similarly, you know, we punch through, and now we are pulling back. We are sandwiched here between the bottom of that kind of like trend line. Actually, my apologies, I am not in a logarithmic scale. Yes, that is a bit better. So we are sandwiched between the bottom of that wedge and that previous swing low, right? So nothing dramatic, right? But yeah, the outlook doesn't look good for Bitcoin. So should there be a bear phase, a bear leg, like confirmed on Bitcoin that heads lower, you know, we may assist to similar things and other cryptos that follow. Moving back now to stock indices, and this is the DAX. And well, this week was ugly, big red candle that is absolutely blasting through this previous resistance area we had for about a year, right? Like 9 months, a beautiful consolidation, a very clean break to the upside early Jan that would tell us, hey, you know, maybe we're gonna have now a great bull phase. We are still in an upward channel on the DAX. We had a pullback, went back to the upside, and then, well, yeah, with the Iran crisis and so on, we came back under basically the tight range. We tested the bottom last week, the bottom of that channel, sideways channel, held above, all good. And this week, another, like the S&P, right? Another signal, even stronger, right? Punching through, and yeah, that's ugly. That's not great. So what's next there? Well, we may be heading lower there and test the bottom of that channel, right? That would be a first, I would say, stop or first area to watch for. And should we head lower, we're not there yet. We have another level there, right? We're not there yet, but yeah, should we break that? I think we could definitely consider bear territory on the DAX, but we are very far from that. But definitely this is not great. We are definitely into ranging mode. And what that means is the range is maybe much deeper than we anticipated, meaning that it's going to take a lot longer to absorb and to come back to the upside on a bull market. Similar story on the DAX. Big week on the DAX there. You know, we tried to last week to punch back through above that key resistance level. Didn't make it, but stayed close this week. We tried again and we headed lower. So this scenario is still at play, right? We are still look at that in a upward channel on the CAC 40 as well. So the next, there's a few basically, but the next, I would say, area to watch for would be somewhere around there, right? The previous like swing, that tight base, micro base that formed before the break, and see how price rebound there. And you know, it's like close as well to the bottom of the channel, so we may find some support there and have a rebound. But again, that means that consolidation is going to be deeper and take longer probably than initially anticipated. But we drew that scenario in blue last week anyways. We knew that may be possible. This is definitely a sign that tells us, you know, we may be heading lower, right? And that's a strong candle, as you can see. So a lot of volatility this week. Heading back now on commodities with gold. And well, I mean, look at the size of this candle, right? That's like the largest candle on gold, full bodied at least. It's almost as big as that one there. That was the super climax one we spoke about late Jan, right? And we did say that like this basically tell us that we had a lot of greed basically, and people taking profit. We went back down. We came much lower the following week. And I was just raising the question, so is the bull market over on gold and silver, right? Why? Because typically, right, after strong climax runs such as these, a lot of take profit happen, people panic, they sell, you have a chain reaction basically. People who have been in a position for a while would typically take profit somewhere there. This is taking, like profit taking, probably from like large holders, whales, institution, who are just cashing out, and that triggers fears. You might have volatility intraday, people panic, they sell, and this is what happened, right? And chain reaction. So we argued, is the bull market going to be over on gold and silver? Again, I didn't know, and I still don't know, but we did say that there may be a rebound, but definitely this poses a question, like maybe over, right? I would, on a speculative trade, I'm out somewhere there, guaranteed. Somewhere in that candle, I'm out, right? Probably wouldn't get the top, but yeah, it can get fairly close. Follow the plan, and you're out. And sure, the war, Iran conditions and Middle East and stuff definitely added some oil to the fire and so on. But I mean, look at that, right? That doesn't look to me that we are about to resume a bull trend, next week. It may not be over, but it may also take a lot longer, right? So one key level that I would watch actually was around here actually. That same level that we broke from right there, and we came as low as that on that particular week. So 1, 2, 3, 4, 5, 6 of 4 to 6 touches on that, and let's see how it behaves. So we may have a rebound, we may have something that basically play tennis in between these two bonds, but as you can see, right, this is going to take many months, and in order to have a healthy move back to the upside on gold, it will need to take multiple months, and maybe toward the end of 2027 we can have a break to the upside. But that, again, another strong signal that there is a lot of volatility and that we are heading towards a deeper correction. Everything is pointing us in that direction, right? Several stock indices, gold indices. It's the same thing for silver. Look at that, right? Same thing for silver. So we are heading lower. We punched through that level, right? We punched through that level. That means that the next area that we're going to look at is probably going to be somewhere around there. We will see, but it's a bit of an unknown, right? It's a bit of an unknown now. So we need to see what happens, but may have kind of a pullback and then a break to the downside. I don't know. We may also just pull back, bounce off this line and come back up. I don't know. But again, yet another signal that tells us, hey, deeper correction may be coming, right? So it's all consistent. Finally, we can look at the DBC, which is commodity index. Well, nothing much happened there, actually. A bit of upside this week. So commodities are still like raging strong, partially because, well, oil is still doing well, right? And I'm going to switch over now. There's nothing much to add there. A lot of volatility though. This is crude oil, WTI. So a lot of volatility. We did lost a bit compared to previous week. But since we had that break, right, we clearly cleared that up, right? And it's just a lot of uncertainty at the moment. So there's just a lot of volatility, right? You can just see like price close very close to the open. You have like weeks up and down. It's a bit of a yo-yo, right? But the commodities definitely are at play there, though the precious metals took a hit. Finally, if we look at EURUSD, let me change these in black. Well, we did say that we had a key break of a key level last week, right? And towards that level, and we may be heading towards to the downside. It may be so that we have an initial pullback as well. And actually, some traders actually believe that we may have a head and shoulders formation. Time will tell, but this is definitely signaling that we may have something like that. We'll see. Either we have like pullback and we head to the downside, or we're going to basically head back around that area and complete the second shoulder of the pattern and break to the downside. So we will see. Yeah, I mean, this favored basically the USD, favors the stock market. Now we have the opposite signal. We have commodities that are down. I mean, the precious metal that are down. All stock indices are down, and I mean, most of them, right? 4 of the key ones that I analyzed broke key levels, right? So yeah, it's not a great outlook. It doesn't mean that that's it, the party is over and we're heading toward bear market, but it's a fundamental shift on what we were talking about, right? We are heading towards probably a just deeper correction, meaning we're going to have to be patient. For speculators such as myself, that means that the screeners are probably going to be more and more empty, and we're going to have to be patient for months with nothing much to look at, and that's part of the game. This is kind of what happened this week, right? When you have a big red week on an index like the S&P, Nasdaq, and so on, right? Well, there's a lot less stocks returned by the screeners, right? Therefore, there are less things to look at. Therefore, there are less potential opportunities, and therefore less trades. So that's the beauty about using a screener and using the 6 elements of exposure setup, like I talk about in my other video. You have criteria to basically align yourself with the market when it's strong and it's basically going up, right? Both phase. And also when it's going down. So expose yourself more aggressively with risk management and more trades when the market is going up, because your screeners are also going to return your opportunity and you're going to risk more per trade, and be very defensive when markets, more defensive when markets are ranging, and very defensive or even stay entirely out when markets are heading down. And this happens naturally because the screeners will just empty themselves. Your open positions will close themselves out, right? And you're going to just be cash. You're not going to be invested. And that's good. That's part of the game. This is how you also make money, by losing less when you have bear phases, right? I want to expose myself to the stuff that is good, to the stuff that works, to the stuff that's going up. I don't want to be betting and gambling on a stock that's going down, right? It doesn't make any sense. So this is based on market anomalies, right, which I use in my trading plan. And that's all for this week. Hope you enjoyed it. Head over the website, drop your mail. There's a free guide over there for you if you want to learn basics of swing trading and how I trade on higher time frames. And I'll see you next week.